Welcome to episode 141 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at how to use volume with price action in Forex. We will look at how volume plays an important role in our trading and how it can help us get better results. It can help us place higher probability trades as well. So let's go on to the charts and see how we use the two tools together.
Here we're looking at volume price analysis. So we will use volume in combination with our price action to determine what is the best time to enter the trade and when to exit the trade. So this is pound CAD 1 hour chart. So in this case, we see that price had been going up and then we come into this resistance level and we get this big bearish engulfing candle, and then we see this double top form here. So from price action perspective, this is a double top chart pattern. We are happy to see that. So that suggests that price is likely to move lower. So let's combine our volume with this and we will see how we can use that in order to take this trade. So we're good from price perspective. So we always want to use the combination of the two and not just depend on volume alone. So I always pay attention to my price action and then I layer that with volume on top. So in this case, as we can see, we had green volume as the price was going up, and then price starts to consolidate here, and we can see our volume, green volume, just drops. So that shows, so if you were in the long trade here, this will show that the volume dropping like this here will show that price is consolidating, and it could, this is not the best time to be on the trade. So if you're in the trade, you could even exit the trade. So, all right, so this is where we want to start looking from our perspective. So from price action perspective, we see a big bearish engulfing candle. So that's a good sign that we could see a reversals here. So in this case, we see a red candle come up and the volume on this red candle is higher than the volume in these green candles. So that's a good sign. We have a big bearish engulfing candle and an increase in volume, in selling volume, which shows that we have sellers that are stepping into the market. So that's perfect. And then we want to look at the next candle here. Now the volume turns white here. So white means the neutral volume, which is a good sign because we do not want to see green volume here, which means that buyers are stepping into the market. Neutral volume is okay. It just means that here we see pullback, but it means that buyers are not in charge, even though we are seeing price go up. So that's good. And then in this red candle, we start to see our we still have the neutral volume in this big red candle. We start to see our red volume come into the market, and we have a good solid bearish candle here. So that's good sign. So we have a double top formation here, and we have a good solid bearish candle here, as well as solid bearish candle here. So that's a good sign from price action perspective. This is a setup that I would take on from price action perspective. Now layering that with volume, we saw red volume come in. Even with the pullback here, we did not see buyers stepping in, which is great. So neutral volume, and then we see our continuation of the selling volume, and we have a good bearish candle. The combination of the two gives us a good place to enter the trade. So once this candle closes here, we can wait for a bit of a pullback. Generally, we'll get pullbacks anytime we have a solid candle close here. So we wait for a bit of a pullback, enter the trade short here, or you can just enter the trade at the close of this candle. Either way is fine. So we enter the trade short, and our stop would go above this high here. So we want to give it some room for our trade to breathe. So we will put our stop right there. And as we can see, price start to drop here. So let's take a look at the volume once again. So once we enter the trade short here, this is when our red volume came in. And as the price moves lower, we can see volume is increasing with each candle here. Now, then the price starts to consolidate and we see that the volume starts to decrease. The red volume starts to go down. Price tries to push down lower, but we are seeing a decline in the red volume. So from price perspective, our price is not going anywhere, and from volume perspective, we're seeing a decline in the red volume, in the selling volume. So in this case, we can, once we see this big engulfing candle close, bullish engulfing candle close, which is a reversal pattern, we can exit our trade because we are almost towards the end of the day and we don't have any volume supporting or providing us an evidence that price is likely to move lower. So we can exit the trade here. From entry to exit, we get 63 pips in our trade. So just to recap, we're looking at volume, how to use the combination of volume and price. From price perspective, first thing I always look at is what does the trade look like from price action perspective. And here we see that we have a double top, we have a nice candle close. And from volume perspective, we want to see that as we are ready to take the trade, that the volume is supporting that trade. So in this case, we have big candle close, bearish engulfing candle, and our red volume comes in. As the price pulls back, our volume stays neutral, which is good. Once we see this solid bearish candle close, we see the volume is back to red. So we pick that up and we can enter our trade short here. As the price drops, we see that the volume goes up, the red volume goes up, which is a good sign that price is likely to continue lower. And then as the price starts to consolidate here, we also see a drop in the selling volume. So the combination of the two together shows us that it's time to exit the trade. So once we have a bullish engulfing candle here, we can exit the trade. From entry to exit, we get 63 pips in our trade. So our profit is 63 pips or $630 if trading one standard lot.
If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points. So you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. I hope you enjoyed this trade setup. If you like this episode, please feel free to subscribe to the channel as well as share this with your friends. I'll be back with another great trade setup next time.